us to talk all of that. Michael Tyler, Chief Investment Officer at Eastern Bank Wealth Management. And right here on the set, Phil Orlando, Chief Equity Market Strategist and Head of Client Portfolio Management at Federated Investors. Good morning to you.
Good morning. Thanks for having me back.
Just help us try to understand the market. The market looks like it's going to go up today, at least. By the way, that's not an indicator of anything these days,
right,
unfortunately.
Exactly.
But given where we are on tariffs, given where we are in Pennsylvania, given where we are on Tillerson or now Pompeo, is there a gamble or a bet? I shouldn't say gamble. That's such a terrible word. In terms of has anything changed in terms of your thinking?
Well, and that's the problem. You've got the narrative, the noise, the nonsense, all of this stupidity on one side, and we would say, all right, let's forget about that and focus on the numbers. We got a terrific jobs report on Friday. The business optimism index hit a new cycle high yesterday. The inflation data has been running nice and benign. When you focus on the stuff that actually moves stocks, corporate earnings last year was the best earnings we've seen in 6 years. The stuff that matters is doing fine if we can just screen out the nonsense.
Okay, so you screen out the nonsense and you're doing what as a result?
Well, we've got a 7% equity overweight in our balanced portfolio, so that's 67% stocks, 33% bonds. We continue to like the sectors that are economically sensitive, and we're continuing to focus on large cap value, small caps, and international developed as areas that we still think offer good value.
Michael, is all of this noise in your mind? All of these headlines we've been talking about, are tariffs noise?
No, tariffs aren't noise, and certainly the replacement of Pompeo for Tillerson injects a little bit of uncertainty into foreign policy issues. But I think markets do tend to look past that. So, you know, what we are going to pay attention to are inflation numbers and earnings numbers, and so far those seem to be coming in pretty well. But we'll really see for sure well, first of all, when we see the Fed meeting next week, what Mr. Powell wants to do and how he says it. And then secondly, first quarter earnings coming through in April will give us our first sense of how much of the earnings growth this year is from tax cuts and how much of it is from actual demand growth. That, I think, will dictate the direction of the market for the rest of the year. Until then, I think we're treading water and doing okay.
Let me just ask you one question on the tariffs issue, because there is a real implication for that. Are there stocks you either want to be in or not to be in during this period where this gets settled out? Well,
the short answer is we don't know. And it's been our view that the whole tariff issue was a negotiating club, if you will, to try to extract some better terms, NAFTA, China, whatever. So we don't know what the final thing is going to look like. And it was our view that all of this was meant to try to get some sort of an advantage in negotiations.
But, you know, one of the things that is true is that as the dollar has weakened over the past year, it's made U.S. exports more competitive. So with or without tariff issues, U.S. companies are doing better, especially exporters. And so a focus on industrials, on some of the other companies in technology that do a lot of export business, with or without tariffs, I think that's a reasonably good place to be right now.
Okay, we're going to leave the conversation there. Sorry to keep it short, guys, but always appreciate your time and perspective.
Thank you very much.
Thanks, guys.